Welcome back to CryptoClarity, the channel where we break down Bitcoin, crypto, and the future of money. Today we're diving into something that's been on the minds of a lot of Bitcoiners. How do you generate real income from your Bitcoin without giving up your stack? And more importantly, what's the truth behind Wall Street products like MSTY? This is going to be a deep dive. We'll start with the basics of Bitcoin as a bearer asset, compare it to gold, break down how people have historically tried to generate yield from non-yielding assets, and then explore Bitcoin-specific strategies, both safe and risky. Finally, we'll unpack why I personally think holding Bitcoin itself is the ultimate income generator in the long run. So grab your coffee, maybe a notebook, because this is going to be a long one. And by the end, you'll have a much clearer picture of how Bitcoin fits into the world of income, investing, and wealth building. Part 1. Bearer assets and why they're different. Unlike bonds, interest, or stocks, dividends, bearer assets don't produce cash flow. Why they're hard to value using traditional finance tools like discounted cash flow models. Example: if I hold a gold bar, it just sits there. If I hold Bitcoin, it just sits there. The value isn't in income, it's in scarcity, portability, and durability. Analogy: comparing bearer assets to farmland that never grows crops versus farmland that produces crops. So the real question is, how can you actually make these barren assets productive without losing them? Part 2. Generating income from gold. Selling off pieces gradually, but you end up with less over time. Lending it out, risk of not getting it back. Putting it in deposit accounts, counterparty risk. Borrowing against it to invest in other assets, leverage risk. Tie it to 2022 disasters like Celsius BlockFi 3AC. Same problem repeated. Lesson: chasing yield on bearer assets often ends in disaster because someone always takes your asset to make risky bets. Part 3. Moving to Bitcoin. Bitcoin is like gold, but more divisible, portable, and secure. Options for generating income. Selling small amounts when needed. Tax efficient in some countries. Lending it out to platforms. Huge risks, just like gold lending. Borrowing against Bitcoin to fund investments. Works, but margin calls can wreck you. Wall Street vehicles like MSTY. Quick question for you. Would you personally risk lending your Bitcoin out to earn 4% or 5% interest, knowing you might lose it forever? Let me know in the comments. I'm curious where you stand. Part 4. MSTY and the Wall Street Yield Game. An option income ETF tied to MicroStrategy stock, MSTR. How it works. Writing covered calls on MSTR to generate yield. Why it's marketed as a Bitcoin income play, but isn't really Bitcoin at all. The memes. I never sell my Bitcoin, I just stack MSTY. The reality? You need USD to buy MSTY, and capital is fungible. If you buy MSTY instead of BTC, you effectively chose not to buy Bitcoin. The risks. You cap your upside. You add counterparty and Wall Street risk. You may actually underperform BTC badly if Bitcoin skyrockets. Case study: covered call ETFs on S&P 500, XYLD versus SPY. Covered call funds often underperform massively over time. Example: personal anecdote with Apple shares during GFC, made a little short term, but lost decades of upside. Part 5. The bigger picture. Why yield can be a trap. People want income. They need to pay rent, groceries, family expenses. But desire for yield creates vulnerability. Scammers and Wall Street products prey on this need. Reality. Bitcoin's strength is not in yield. It's in long-term appreciation and holding power. Quote: Bitcoin has no top because fiat has no bottom. Long-term holding versus chasing short-term income. Part 6. Real alternatives to generate income. Proof of work in life. Earn fiat, stack sats. Side hustles paid in BTC. Creating Bitcoin content, businesses, or working for Bitcoin companies. Sell small amounts of BTC as needed. Simple, transparent, and tax efficient. Borrow against BTC only if absolutely necessary. The ultimate lesson: there is no free lunch. So here's the takeaway. You can chase yield with Wall Street products like MSTY, Or you can lend your Bitcoin and hope you get it back. But every single layer of yield adds counterparty risk. The cleanest, simplest strategy? HODL your Bitcoin in cold storage. Let it appreciate over the long run. If you need income, sell a little when the time is right. Or better yet, increase your earning power in fiat and keep stacking sats. Bitcoin isn't just money, it's freedom. Don't trade that freedom away for a few percentage points of risky yield. Now I want to hear from you. Do you think MSTY and products like it are a smart way to earn income on Bitcoin exposure, or just another Wall Street trap? Drop your thoughts in the comments below, and if you enjoyed this deep dive, please like this video, subscribe, and share it with a fellow Bitcoiner. Thanks for watching, and I'll see you in the next one.